So sellers are demanding higher prices in order to sell stocks to people that want to buy it. The problem is that the buyers are going to live down here. So at some point when the market breaks, for whatever reason it does, there's a potential here for a fairly sharp decline because buyers live lower than where sellers are right now. Buyers are there. They're just not willing to buy here in most cases. So let's talk about what you need to know before the bell this morning. The markets are doing just fine, and on Friday we just basically flirted with all-time highs a bit. You know, it just kind of closed flattish on Friday. Really no big deal. Again, the biggest risk is just, as we've talked about before, this kind of big gap here between the markets and the underlying moving averages. But again, we're seeing a lot of speculative push in the markets, really in a lot of asset classes, not just stocks, but as we've talked about before, you're seeing a speculative push in gold prices as well. Gold's continuing to do it very well. They're going to be up about a percentage point this morning because of the government shutdown. It's just kind of a trade on. But again, we haven't seen a stretch like this in quite some time where the volatility of the VIX has picked up here a bit, and at the same time, you've got an extremely overbought condition in gold prices on multiple levels. In fact, we haven't seen gold this really kind of overbought since this last kind of correction process that you saw previously. So again, just very, very extended here, but again, that doesn't mean anything until it means something. But again, you're also just getting very much like the markets. Again, the speculative push is giving you a very big deviation between moving averages as well. So that gravity is going to is just one kind of thing to pay attention to. But again, this is across all asset classes right now. We're seeing exactly the same setup in emerging markets also. And again, as we kind of just go across different asset classes in general, you just kind of see this kind of very similar setup of asset prices being driven. Again, this is emerging markets. Again, great run here, very extended from long-term means, very overbought. You see it in international stocks as well, developed international, very big gap between moving averages, very overbought. Again, it's just right now across all asset classes, you're seeing exactly the same type of speculative push. Again, nothing wrong with that. That's part of a bull market. That helps support prices right now, but you're also sucking a lot of capital into the markets, which you know, the thing that we've talked about before, and one of the things that continues to be the thing you want to pay attention to is that at some point, here's where the sellers are living right now. The sellers live up at these higher levels because, again, in order to get me to sell my stock, say you wanted me to sell you my Nvidia stock or whatever it was, you're going to have to pay me more for it because you've got to give me a reason to sell because the markets are doing so well right now. So sellers live up here. So sellers are demanding higher prices in order to sell stocks to people that want to buy it. The problem is that the buyers are going to live down here. So at some point when the market breaks, for whatever reason it does, there's a potential here for a fairly sharp decline because buyers live lower than where sellers are right now. Buyers are there. They're just not willing to buy here in most cases. So again, as sellers are dragging up the retail buyer into the market, the professional institutions are setting at lower levels saying, yeah, I'll buy it when it comes down to these levels. So again, that's the risk, and that's what sets the market up for these fairly sharp corrections like we saw in April. Doesn't mean we're going to have one tomorrow, next week, even next month. But again, at some point, something will happen and you're in a fairly sharp contraction. So that's when we always talk about taking profits, managing risk, exposure, those type of things, because losses are important. In the general scheme of things. But markets are doing fine. Again, nothing to worry about right now. Momentum's very strong. Just pay attention to the risk profile in your portfolio and you'll be fine. That's what you need to know before the bell this morning.